Hey everybody, this is Robert Savori. I wanted to share this video with the world because I just spoke with somebody regarding um, car payments, and I it was an amazing conversation. It was like an epiphany moment for this other person who I was speaking with regarding buying a Honda Odyssey, and this is just an example of something that everybody should know regarding having good credit. Now, what you see over here on the screen is the app on my phone, which is the Quicken Loans Mortgage Calculator. This is a free app. Anybody could get it. I highly recommend that everybody get it because you can play around with it regarding financing properties, homes, a boat, cars, whatever, credit cards, all that stuff. You could put it on here. It's a great app to have. I use it every day. I do real estate, and I use it pretty much every single day to go over numbers because I always have many people ask me, "Hey, if I buy this house for this price and the taxes are this much, and I put the down payment and the interest rate, is how much would my monthly payment come out to approximately?" So, this is a really easy app to use. You just plug in the numbers, and voila, it's all good. So, um, another reason why I want to share this with everybody is because I want everybody to go through the same joy that I went through when, once again, I saw this individual, come to this realization of, wow, like this is possible, and wow, I can save myself thousands of dollars if I just fix my credit. So, um, or make it better. So let me go over this, okay? So, for example, I already have some numbers over here ready. So it's very simple to use this app. So let's say somebody's buying a Honda Odyssey, which is a minivan, for $35,000. So we have $35,000 here, right? And I know that every car purchase isn't exactly 35,000 or 40,000, 45,000. But let's just imagine that if it is, okay. So $35,000. Let's say the down payment is $5,000, okay. All right, and let's just say because you have excellent credit, because maybe your credit is 740 or higher, or maybe even in the 800s, then a bank would probably give you, let's just say, a 2.5% interest rate, okay. So, and let's say you take out a loan for a total of 6 years, okay, which is 72 months. So your monthly payment will come out to $449.14, okay, which isn't bad. All right, now you have a Honda Odyssey. You use it to travel with your family, and it's a great car to have. I have one of those cars. It's fantastic. It really serves its purpose, big time. So let's go over these numbers again. $35,000 purchase price. That's let's say, and that includes everything. That includes the MSRP, the shipping and handling, the taxes, all these other things, like all these things. Once again, it's probably going to be more, maybe less, but let's just say it's exactly $35,000. And of that 35 grand, you're putting $5,000 down, which in essence means that you're really financing $30,000 exactly, right? And because of your excellent credit, you have a 2.5% rate for 6 years. Okay, if you take a look at these other line items, you see that there's taxes. Remember, this is a mortgage calculator for a house, so because this is not a house, so I'm not going to put anything in there for taxes or insurance or property insurance or a monthly HOA due. So because of that, and because of these numbers, your monthly payment comes out to $449.14, which isn't bad. Now, let's just say your credit is not so hot, right? And and that's okay. You can still get a car. That's why you see all these signs at car dealerships saying no credit, bad credit, no problem. you know, they'll still get you a car. You know how? Because all they're gonna do is once they run your credit, then they're gonna reach out to specialized banks who give out a financing to quote unquote special buyers of cars. And instead of giving you a 2.5% rate, let's say they give you a 10% rate. So I just plugged in that number. I press next, And now that number goes from 449 and 14 cents to $555.78. Okay. Okay. Now it's the same purchase price, the same down payment, different interest rate, same 6 year, 72-month term, right? Uh, but what's the difference now? The difference is, so remember, you're paying 500 $555.78 with the not so great credit, but with the good credit, you're paying $449.14. So the difference between that is $106.64 more to pay because your credit isn't where we all want it to be, which is in an excellent level. Right now, I know a lot of people would say, well, it's only $100 more that I got to pay every single month. Okay, first of all, every time I hear that, even if somebody says to me, well, it's only $5 more, $10 more, look, take your $5 bill, go to your stove, light it on fire. See if you're willing to do that. Or you're walking down the street, you see a $5 bill on the ground. Are you just gonna walk right by it? Let's say there's nobody else around. You don't know who it belongs to. Are you gonna tell me you're gonna walk right by it because, hey, it's only a $5 bill? It really isn't much. Now, I've heard individuals say, hey, I really need a car. It's only $100 more. Okay, this is what you're really doing when your credit is not so good. Okay, this $106.64 greater payment that you have to make, all right, is just for 1 month. Now, remember, you're taking out a loan for 6 years, which equals 72 months, right? So let's go back to this calculator here. So now you have $106 more they have to pay times 72 months, which means that now you have to pay an extra $7,678 in interest alone. Now remember, everybody, this is just an extra in interest. You're already paying. Let's say you were, where's my mortgage calculator? Let's say, you're back here at the 2.5% rate, right? You're at the $449.14. Let's just say, okay, for here, you have to pay interest here anyway, okay? Now, in addition to that, now you're going to pay another $7,678.08. So let's go to this. So for over here, okay, 400. Okay, so you're paying $449.14, right? Let's go to this calculator. $449.14 times 72 months. You're paying $32,338.08. Okay. Now, remember, you're financing $30,000 because you're buying the car for $35,000. You're putting a $5,000 down payment, and so you're asking the bank for $30,000 loan. Okay. Now, because you're getting the $30,000 loan, all right, but your total monthly payments of the $449.14 times 72 months comes out to $32,338.08. You're really giving the bank $2,338 in interest, which isn't bad, all right, at a 2.5% rate, and it's doable. I mean, I've gotten a 0% rate on a car. Okay, I know people who get a 1% rate or a 0.9% rate or a 1.9% rate. Okay, now remember, this is the amount right here. This $2,338.08 that you're automatically already with good credit given to the bank. Okay, for interest. Okay, now remember, let's go back to that number that you would have to pay extra if you have not so great credit, which is this $7,678.08 right here. Okay, remember. So now what I'm gonna do is I'm gonna add this number to the automatic. Where was it? 2338.08. Okay, this this amount plus $2,338.08. This is what you're actually paying the bank, $10,016.16 in interest alone if your credit is not so great. Okay, so this so this monthly payment of $555.78, right? In total, if you add it all up, for 72 months, what you're giving to the bank is in interest alone is $10,016.16. Why on earth would you want to do that? I mean, $7,678 extra in interest alone to the bank. The reason why I'm also sharing this video with everybody is because when I spoke with this individual today, I told him for a fraction of this cost, where's the 7,000 of this cost over here, you can fix your credit. You can get other trade lines, or you can get other credit cards, or you can ask somebody to have you piggyback on their account. All right, so that your credit becomes better. Okay, there's so many things that you can do with $7,678. Instead of giving it to the bank in interest, all right, for once again, for 20% of that amount, even 20% of that amount, you can have your credit become so much better, right? And then it's gonna affect everything else. So it's not gonna affect just your car payments. It'll also affect how much payment you would be making for, like, let's say you bought a house, okay? Your credit cards, all right? The credit card companies will be, dying to be your client, okay? So that they can give you financing. Banks, okay, will tell you, hey, we offer this introductory rate of 0% for the first 18 months, which is really a teaser rate, but hey, that's not bad. 0% on purchases that you're gonna make anyway. You'll also be probably eligible for some credit cards that will give you some cash back. Like, for example, I have an Amazon credit card that I use on all of my Amazon purchases, and it's an automatic 5% back on every purchase that I make on my Amazon card right now. So if I buy something for $100, I'm really paying $95 for it. All right, now you add that up and total it to everything that you ever buy on Amazon, and people buy tons of things on Amazon. All right, you're going to be able to take advantage of that. Why? Because of your credit. It revolves around your credit scores, your credit report, your credit history. So important, so vital, right? So I hope that people share this video. If you have any questions or any comments or looking for more information, please post it below. Subscribe also to this channel. And you know what I'm thinking about right now? What I'm also going to include with this video is me going to my stove and burning money so that everybody sees what I'm talking about. Okay, I really want everybody to understand that pretty picture, which is actually a not so pretty picture. Okay, once again, anybody have any questions, any information, anything you want to share, just post it below. Please get this Quicken Loans mortgage calculator. I do not work for Quicken Loans at all. Don't have any affiliations with them, but this is an amazing calculator for free, okay, that you can just put on your phone and use it anytime. All right, thank you very much.